Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the corporate world. It's like trying to find a needle in a haystack, but the haystack is full of fine print and the needle is, well, you'll see. Today we're diving into Astra Energy's latest 10Q report, and let me tell you, it's a real page turner. We'll break down their financial health, what's going on behind the scenes, and whether they're actually building towards that cleaner energy future they talk about. This is their quarterly report, giving us a snapshot of how Astra Energy is doing for the 3 months ending May 31, 2025. Think of it as their financial diary for that period. First off, let's look at the company's stock situation. As of July 14, 2025, they had 75,105 and there's a lot of shares, and we'll see how that plays into their financials. Now for the really juicy stuff, their balance sheet as of May 31, 2025. This tells us what the company owns and what it owes. Total assets stand at $7,889.919. That's down from $12,032.771 at the end of August 2024. So their total worth on paper at least has shrunk significantly. On the flip side, their total liabilities are $13,376,391. That's a big jump from $11,616 in August 2024. So they owe more now and their assets haven't kept pace. And this leads us to their stockholders' equity, or more accurately, a deficit. As of May 31, 2025, they have a deficit of $5,486,472. This means if you sold everything the company owned, it wouldn't be enough to cover what they owe. This is a really important point to keep in mind as we go forward. Now let's look at how they performed in terms of making money, or in this case, losing money. For the 3 months ending May 31, 2025, revenue was $0. And for the same period in 2024, also $0. They're not generating any sales revenue at all. This $0 revenue has a direct impact on their bottom line. For the 3 months ending May 31, 2025, their net loss was a whopping $408 of just $80,435. Compare that to a loss of just $80,405. And that translates to a loss per share of $0.06 for this period versus a tiny loss of $0 in more money for every share of common stock they have. This trend continues when we look at the 9-month period. For the 9 months ending May 31, 2025, their net loss was $5,871,861 for the same period in 2020, $847, compared to a loss of $721,881. We're looking at their equity statement, it really emphasizes the growing deficit. The total equity deficit at May 31, 2025 is $5,486,472. This is a big change from a positive equity of $360,554. This shows a significant deterioration in their financial position. Now, let's see where their money is actually going and coming from. For the 9 months ending May 31, 2025, they used $88,366 in cash from their operations. This means their day-to-day business activities are burning through cash. Last year, they used $21,234, so more cash is being consumed by operations. In investing activities, they used $125,000 this period, mainly for a loan receivable. Last year, they used $20,723, which was for purchasing an automobile. On the financing side, they received $200,000 this period, compared to $45,300 last year. This suggests they are getting some money from loans or stock sales. The net change in cash for the 9 months ending May 31, 2025 was a decrease of $13,366. Their cash balance dropped from $23,012 from $23,012 from $23,012 from $20 to $9.6046. This is a critical observation. They have very little cash on hand. Let's dig a bit deeper into what this company actually does. They are involved in clean and renewable energy projects, waste to energy, and power amplification. They've set up several subsidiaries in places like Uganda, Tanzania, Kenya, and California. They've been working on a joint venture related to waste to energy patents, but it seems those plans hit a snag. They've had extensions, but as of December 2024, discussions are ongoing on how to proceed with a new transaction. This implies delays and potential restructuring of their plans. There's also a joint venture for a pilot project involving a 1 megawatt Holcomb Energy Systems inline power generator. They received a deposit, but as of May 2025, no joint venture operations were in place. This suggests these projects are still in the planning stages with no firm operational start. They also mention adopting new accounting standards, which is standard practice. Nothing too alarming here, but it shows they're trying to stay current with financial regulations. This is a really important note. They explicitly state that their accumulated deficit and lack of revenue raise substantial doubt about their ability to continue as a going concern. This is a big red flag. They plan to raise capital through shareholder loans and private placements, but there's no guarantee this will be successful. They acquired a license for the Holcomb inline power generator, which they have amortized over 18 years. In the current period, they had to impair this license in full, recording a loss of $1,528,091.18. This means whatever value they thought this license had is now considered gone. Similarly, their investment in Astra Holcomb Energy Systems LLC was also impaired in full, resulting in another loss of $2,755,000. This signals that their investments in these ventures haven't paid off as expected, and the asset value has essentially evaporated. They've entered into land lease agreements in Zanzibar that are quite long term. 33 years they are delinquent on payments and have incurred penalties of $234,659. The company states these payments are conditional on securing a power purchase agreement, which is a critical funding condition. This shows a dependency on external agreements for even basic operational costs. This section details money owed to company insiders like the CEO and directors. For example, they owe a director $2,710,500 for advances related to insurance on a loan facility, with a significant transactions are substantial and indicate a heavy reliance on company insiders for funding. They have a $100,000 loan that is in default. They are negotiating terms and have accrued $429,500 in late fees. This loan is personally guaranteed by the CEO, which puts him personally on the hook. This is a very recent development. As of June 5, 2025, they entered into a settlement agreement with Holcomb Energy Systems. Essentially, Astra is returning 10 million common shares and relinquishing control of the joint venture company and exclusive rights to the Holcomb generator. In return, Astra gets an open license to use the technology in its own projects, but will have to pay royalties. This really changes the game for them potentially and might signal a shift away from direct manufacturing and distribution towards project development. In their management discussion, they reiterate that they have limited operating capital and need more funding to meet debt obligations and expand. They acknowledge that failure to get this funding will negatively impact their business. They estimate operating expenses of around $600,000 for the next year. Given their current cash balance of just over $9,000, they will absolutely need to raise funds to cover even these basic projected expenses. This section acknowledges that their internal controls aren't fully effective, citing issues like a lack of an audit committee and insufficient documentation. This is another area of concern for investors, suggesting potential weaknesses in financial oversight. Now let's put on our Warren Buffett hat and look at the bigger picture. Astra Energy is in a very precarious financial position. They have significant accumulated deficits, zero revenue, dwindling cash reserves, and substantial liabilities. The impairment of key assets like their license and investment signals that previous strategies haven't worked out. The company's direction seems to be shifting towards project development rather than direct manufacturing and distribution, especially after the settlement with Holcomb. This could diversify their approach, but also means they're still heavily reliant on securing funding and power purchase agreements for these projects. The default on their loan and the related party transactions highlight the critical role insiders are playing in keeping the company afloat, which can be a double-edged sword. The path forward is incredibly challenging and hinges entirely on their ability to secure significant new funding. Without it, the ability to cover even their estimated operating expenses for the next year is doubtful. The lack of effective internal controls adds another layer of risk. In essence, Astra Energy is a company in the early stages of a very capital-intensive industry, facing significant hurdles. While they are pursuing opportunities in the growing clean energy sector, their current financial realities are grim. So what's your take on Astra Energy's situation and their future prospects? Do you think they can turn things around and secure the necessary funding? Or are these numbers too much of a red flag? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more dives into the world of corporate finance. And don't forget to join our Discord community. The link is in the description for more real-time discussions and insights. Thanks for watching, and we'll see you in the next one.